Hello, I am Miziwan from the United States Stock Market University. Let's start today's United States stock market news on April 4th. We welcome you to Miziwan, who consistently maintains the standard of United States stock investment without changes today. In Korean, the phrase hello is actually something we say habitually without any particular thought when we meet someone. I also greet everyone with hello when I record the broadcast every day like this. Today, this word hello carries a lot of weight. We experienced a tremendous explosion yesterday, and I don't know if you all are okay. Our investment is ultimately for the goal of happiness, but we can't let go of happiness because of this process, right? I hope you all manage your stress well and overcome this difficult situation a little more slowly while changing your mood. I was on the broadcast yesterday. I mentioned to the investors in Vietnam that I would like to share my own experiences. There are comments from important readers who actually shared their own experiences. This is a valuable post left by a person who uses the identification June5452, Xiu. I want to share my experience with those who are struggling in a difficult market. In the long bear market of 2022, the entire portfolio fell by as much as 40%. It was very difficult to endure the long bear market at that time, but I managed well afterwards and went up to 120%. There was some shock in this bear market, but I'm still holding on. If you get through the bear market, your portfolio will stabilize healthily, and I believe there will be a prosperous future if you endure this bear market well. Thank you for your valuable advice, Mr. June 5452, and I will try to read one more. This is a message left by Mr. Yusujin. Happy birthday, Mr. Miju. I remember the first time I met you at the hotel as you introduced it. I still remember how happy you were at that time. Even during the difficult times of Corona, I met Mr. Miju. I've been building up my knowledge about United States stocks, and the stocks I bought last year experienced a 140% profit. I believe there might be an opportunity this time with the market downturn, so I'm slowly adding more, but I'm not at ease. I'm always grateful to be able to be with the positive Miju. Today, I hope it becomes the happiest day of your life. I'm extremely grateful for your positive energy and your meaningful comment. Mr. Sujin Yu, I keep looking for such places, and these days it seems like I visit too often. In 2020, 2022, and now slowly in 2025, I'm starting to feel the bear market. Well, compared to the past, investors probably have better access to information, and also it seems like a lot of young investors are joining in. Stock price volatility has increased significantly compared to historical levels in the United States market. In such cases, the volatility can be risky depending on our mindset. Remember that volatility can also be an opportunity, and proceed with prudent investment activities. Well then, let's start today's Big Tune news prepared for April 4th. Well, I will try to summarize the volatility of the United States stock market yesterday, which ended sharply as well today. First of all, if you look at the S&P 500 index, well, the fact that the entire market is flooded in this designated bright color is extremely rare. As you can see, the tech stocks are hardly ever found in black. So you can see at a glance that the extremely large sell-off has taken place. I will summarize the movements of the three major indices. The 4% or 3.98% and the S&P 500 fell a whopping 4.84% in a single day. Finally, the 5.97% or about 6% in a single day. It's almost like a panic after the pandemic. This is not the first time we've seen such a sharp drop in a single day. Well, today we will look back at yesterday, which was the worst day since the COVID-19 outbreak. After the Fed announced its hawkish monetary policy, the stock market experienced its worst day since 2020. It was the first market crash we've seen in 5 years. The S&P 500 Nasdaq and Dow all crashed, and the total market capitalization of United States stocks lost $3.1 trillion. To give you an idea of the scale, to put it into perspective, on March 16, 2020, when the whole world was in panic due to the pandemic, people were wondering if the world was going to collapse due to coronavirus disease. 2019, the amount lost was $3.5 trillion. So we made a huge explosion in one day yesterday in response to the pandemic. That's how it can be summarized. The yield on 2-year national bonds fell to 3.72%, and the yield on 10-year bonds fell to 4.05%. Let me remind you again, the yield on national bonds is inversely proportional to the price of the bonds, so when the yield drops sharply like this, it means the price of the bonds has risen. Therefore, it can be concluded that money is being accumulated as a safe asset. So one of the things Trump wanted is now being achieved. President Trump has made a lot of effort to lower the national debt. President Trump's broad 10% tariff plan and high tariffs on many major trading partners completely upset the monthly forecast. Completely unexpectedly, he presented a brilliant idea that I couldn't even imagine. Therefore, the possibility of this tariff causing price increases, along with the impact on companies importing physical goods into the United States, has also been considered. And on Thursday, concerns about the game's cancellation also increased. Therefore, various worst-case scenarios are emerging, and if you look at it this way, you will see. We don't know if the Trump administration is playing a game of chicken with its endless partners, but from the perspective of market participants, they won't wait for the outcome. This is the opinion of Michael Aaron, a leading investor in Spider Asset Management. Instead, investors will sell first and ask questions later, or just panic, that's what he's saying. And while it's a big assumption, if Trump's tariffs bring about a general global recession, what does this mean? The fact is, we're raising tariffs because the others have raised theirs, right? So now, if a compromise is possible and many countries lower their tariffs imposed on the United States, Trump would also lower his, right? If that happens, it could lead to a simultaneous reduction in trade barriers worldwide. That would be the ideal outcome. In that case, the risk could quickly rebound. However, if the United States' trading partner retaliates and adopts countermeasures, it would go the other way. Economic growth can be rapid, and the market can also grow rapidly. It is possible to predict. Well, yesterday in such a situation, the Chicago Board Options Exchange Volatility Index, what we call the VIX surpassed 30 for the first time in a long time. That much fear is spreading in the market right now. You can see it like this. Next is Yard's opinion. The worst scenario is that high interest rates continue, and thus a recession unfolds over the next few days, and this recession becomes permanent. In the end, if high tariffs are actually implemented and a trade war breaks out, and as a result, corporate and consumer debt increases, we could end up in a recession, which we absolutely hate. The risk in stocks is high, which is usually associated with high volatility. This point bears emphasizing, including Apple. The 7 major companies in the Magnificent Seven and small cap stocks were among the types that recorded the biggest drop on Monday. Russell Reacher has been closed in the bear market area since yesterday. This story has dropped more than 20% from its peak. According to analysts, such a significant drop in small-cap stocks is a warning that a full-scale war could intensify, reinforcing investors' fears that a crisis could erupt. Why? Because small caps were expected to suffer if trade barriers were raised. Well, what does this mean? If Trump's tariffs remain high, it could lead to an increase in the price of imported goods. American companies will gain competitiveness. Therefore, from the perspective of small homeowners and small businesses in the United States, it is theoretically a very positive thing. Well, despite that, are you saying that the Russell 2000 index has fallen to the bear market territory? So it's receiving more attention for its negative impact rather than its positive effect. What does that mean? It means the game is immediately forfeited, and if the game is forfeited, the ones that take the most hits are undoubtedly the small businesses, which are likely to face various difficulties due to lack of capital, high loans, and so on. It seems possible to summarize it like this. Well, let's summarize it in a word of the host. On this Friday, a very important economic indicator will be announced, which is the employment report for March. Another big sell could happen. Why? Because as many of you may know, in recent months, there have been many reports of soft data showing that consumer and corporate sentiment has been rapidly declining. The soft data mentioned here refers to the results of surveys. Well, the hard data employment report that is being released today is now officially data we can trust. I've said this a lot. So, even if we ignore the soft data, the problem is if the hard data, the employment report, is not good, then we have a big problem. You should see it this way. Therefore, the employment report being released today must prove that the United States economy is still robust. You should see it this way. Additionally, Federal Reserve Chairman Jerome Powell is set to deliver a speech today. From the perspective of investors who have completely forgotten about the Trump bump, even expectations for the annual bump, if the annual chairman lowers it, the possibility of the situation becoming tense due to the current tax issue has increased significantly. Because of this, we can now hope that the Federal Reserve will not raise interest rates, and we can have such expectations. But if the Fed chairman today says there's no chance of a rate cut this year, we really have nothing to believe in. So there's one very important point to be made today, if you see it this way. However, the most important thing in the end is the response of other countries targeted by this sanction. Due to this, the United States market collapsed yesterday. Why? Because the ball is no longer in Trump's court. Trump has now passed the ball to another country. Now it's about what actions other countries' leaders will take, our investors. Now it's a situation where we can only watch how the United States' trade partners respond to Trump's policies. Now all we can do is wait. There's nothing we can do. And as humans, we extremely dislike situations that we can't control. That's why many investors make the mistake of leaving the stock market every time they choose the only solution they can control, and this mistake is repeated over and over again. So, when the stock market crashes like this, if our investors make a decisive mistake, what should I do in this situation now? The fear is overwhelming, but we are surviving now as we did in the past. The nature of humans, if they feel danger, they run away or do something. But because I can't do anything, the only thing I can do is to throw away the stocks. That's why we keep taking different actions. Even though we know that we should buy stocks when they fall and take advantage of panic when it's excessive, we seem to make the mistake of throwing away stocks in fear every time panic rises. Next, we will try to observe the fear index of the market. Suddenly, it rose sharply in just a few days. Now it has exceeded 30 and is up to 30.7. If the VIX exceeds 30, we can define that the market is in a state of panic. In the past year, the VIX has only once risen to such a high level, exceeding 30. That was on August 5th, 2014, you all may remember. There was a situation where the Japanese stock market and the United States stock market collapsed as the carry trade was liquidated. You can directly confirm that the fear is as high as it was then. The fear-greed index has declined to 7, showing no improvement. It's extremely rare to see the fear and greed index fall below 10. So, right now we are almost at the extreme end of fear, even among extreme fears. So we can define that people are almost in a state of panic right now. Well, yesterday was Thursday. Every Thursday, the results of the American Association of Individual Investors survey are announced. According to the results announced yesterday, among the current market participants, the United States stock market will rise in the next 6 months. The people who have a pessimistic outlook make up 21.8%, and currently a whopping 61.9% believe that the market will continue to fall, maintaining a negative stance. 61.9%, that's almost the highest level. Even when the atmosphere was not very good recently, it did not exceed 60. Therefore, investors with a tremendous ratio are now targeting the bear market at almost 62%, a tremendous number of 61.9%. You can see it this way. According to the results of the American Association of Individual Investors survey, almost 62% of investors are now taking a bearish position. The reason why it has risen to such a high number is that it slightly exceeded 60 on September 6th, 2022. So it's even higher now than it was then. And before that, as you can see here, there was a time in March 2009 during the financial crisis when it exceeded 70. Of course, it could go up to 70 this time, just like in 2009. However, in my opinion, the possibility seems a bit slim. In my view, the current situation is not comparable to the financial crisis. Anyway, it's not common to see the non-governmental rate, which has exceeded 60 for a long time, almost hitting 62. Then in September 2022, it had almost risen to 61. In 2009, it exceeded 70. But let's check again to see what happened to the United States market after that. Now, if you look at the return rate after September 2022, the United States market rose by 8% a month later, and then after 6 months, it rose by 10.3%, and after a year, it skyrocketed to nearly 15%. And in cases like 2009, when this index rose to 70, it soared by a whopping 9.4% after a month, 34% after 6 months, and created a skyrocketing trend of 46.6% over a year. So what does that mean? We don't know if this is the bottom of the United States market right now. It could fall further for about a month, 2 months, or even 3 months. However, the important thing is that if we look a bit further, at least 6 months, if we think about after a year, now could be a very good low-cost buying opportunity. That's my personal opinion. The next prepared article is a market forecast. The market forecast we're going to look at together this time is from JP Morgan, the largest financial company in the United States, and it's a very dry article. It was announced a few hours ago, but the content is not very dry. It's a gloomy news that the probability of a recession has risen to 60%. Read it once to see what kind of logic is hidden in it. JP Morgan's global economist has expressed grim predictions about President Trump's aggressive tax policies. And if you ask what he said more seriously, he used a stark expression that it would lead to a disaster. In a customer research note released on Monday, JP Morgan's Bruce Kasman said, following the announcement of the day of the solar eclipse on Wednesday, the risk of the world economy falling into turmoil has rapidly increased from the existing 40% to a whopping 60%, thus sending out a warning message. The devastating impact of United States policy has been recognized as the biggest risk to the global economic outlook throughout the year. It's not something new. However, the recent news about the announced Trump tariffs is strengthening our concerns even more. It's because the United States trade policy has become far less business-friendly than we had anticipated. It seems fundamentally likely that companies' earnings will drop significantly. The economists of this major bank, you see, they explain that fundamentally when a United States household or business needs to purchase an imported good, it effectively raises the tax, you see. Due to Trump's tariff plan, they predict that if import costs increase, the prices of almost all items from foodstuffs like coffee and sugar to clothing, cars and household appliances to even bulk purchases will inevitably rise. Analysts at JP Morgan predict that the tariffs announced this week, combined with previous tariff increases, will raise the average tax rate in the United States by about 22%. So it's been raised to 24%. That's how they're predicting it. If we calculate this in terms of gross domestic product, it corresponds to about 24%. According to predictions, the gross domestic product will drop by 24% due to the Trump administration's policies. This level of increase corresponds to the largest tax increase since World War II. Therefore, the current impact of Trump's tariffs is almost on par with World War I and II, presenting a grim prediction. This impact can further expand through bankruptcy, the collapse of American companies, and the destruction of public confidence, as explained. So if such policies continue, there is a high possibility that the United States and the world economy will fall into a recession this year, which is being emphasized. Through the probability scenario update, we can understand that the risk of a recession this year has increased to 60%. Therefore, JP Morgan had been seeing it as 40% until recently, but now it has exceeded 50% and the United States economy is likely to be hit with a whopping 60%, and this is the warning being given. However, JP Morgan's economists are cautiously offering a glimmer of hope, saying that the United States and the global economy are not necessarily headed for a disastrous outcome. So what does this mean? Policy adjustments could occur in the coming weeks, a significant point according to JP Morgan's current view, suggesting a possible policy change. Furthermore, it's based on the cautionary stance towards the United States and global expansion, and they continue to emphasize that it can withstand shocks of a reasonable size. This suggests that if the current interest rates are maintained, a sudden event could occur, but if some agreement is reached to lower the interest rates, the current economy is extremely heated, so it could be cooled down. However, even then, if the current policy is fully implemented as announced, it may not go well accordingly. If the currently announced content is applied as it is, it will lead to a practical shock in the tariff economy, and this is the current situation. If Trump's policy continues, it's because JP Morgan predicts a 60% recession, considering it an irreversible shock. You'll see if you look at it this way. Well, let's summarize in one word of Michigan. As many of you are already focusing, President Trump is. He announced different implementation dates for the basic tax and the additional tax intentionally. The basic tariff will be imposed from April 5th, and the additional tariff is expected to take effect on April 9th. That means we still have about 5 days left, and Trump has left about a week's time for negotiations, which can be interpreted as a strategic move. Of course, as I mentioned yesterday, the unconventional method of calculating tariffs based on the trade surplus makes the conversation and compromise very difficult. However, we will hope that a full-blown trade war between the United States and the rest of the world does not break out. In the next 4 or 5 days, if some good news is announced in succession, wouldn't the chances of a recession decrease here? It seems like we can have such expectations. Next, we will try to discuss the stocks of NVIDIA and semiconductor companies. Why? Because in President Trump's tariff policy announced this time, semiconductors were unexpectedly exempt from tariffs. Despite this, we will try to examine in detail the reasons why semiconductor stocks are rapidly rising. Despite the negative news about tariffs on Monday, stocks related to chips also plummeted. Semiconductors were excluded from the tariff plan announced by President Trump on Wednesday. Therefore, at first glance, this announcement could potentially allow semiconductor companies to avoid the high tax rate of 32% in Taiwan, which is quite significant. However, investors are not taking this lightly, as you can see. NVIDIA's stock price has dropped nearly 7%, and since the start of this year, it has declined by 24%. And Micron's stock plummeted by 14% yesterday, Broadcom by about 9%, and TSMC also dropped more than 6%. The market's negative response is due to a variety of reasons. There are multiple factors at play here, not just one or two. Firstly, the semiconductor-related taxes are still in progress and are expected to be discussed separately. So it's not that the taxes are completely eliminated, there's a bit of uncertainty left. The White House announced a fact sheet stating that semiconductors are not subject to tariffs after President Trump's announcement. However, it's not that the tariffs on chips have completely disappeared. A high-ranking government official mentioned that semiconductors, medicines, and timber will be handled separately. Therefore, this is the first disaster, and secondly, because there's a cumulative effect on the already imposed tariffs, the economy can deteriorate and demand can decrease. Well, this means that even if the semiconductor tariff is completely eliminated, or if a significantly lower rate is applied separately, the problem is that if the economy weakens, various products, including semiconductors, sell less, and if that happens, the possibility of a sharp decrease in demand for semiconductors is high. Therefore, if the situation worsens, semiconductors will also be affected, and we can speculate like this. The analysts of Monster Star are coming out. It is expected that about 10% of the tax will still be imposed on semiconductor products. Each announcement will be made separately, but predictions suggest that about 10% will not be imposed. And if such a thing happens, companies will be able to find creative solutions. For example, if TSMC is regulated, TSMC's sales are said to be about 70% from United States customers. So there's no choice but to have a tariff, and TSMC can also ship products through countries with low tariffs. The issue is that it's a fleeting convenience. Ultimately, the tariff can't be avoided. And what's more worrying is the disruption of the supply chain. Most of the chips do not come into the United States as single products. That means they don't just import the semiconductors, but rather they come in the form of finished products like computers or mobile phones. Therefore, there's no choice but to suffer due to the tariffs on products like computers and mobile phones. You can think of it this way. The United States currently imports around $20 billion in computing equipment and $11.4 billion in wireless equipment. However, it is expected that about 40% of the tariffs will be imposed on that. If that happens, neither computing equipment nor wireless equipment would sell well. This could greatly suppress consumer purchases and have an impact on the overall industry. Therefore, semiconductors may not be safe either. It seems this is the conclusion. Another issue is the adjustment of production volume. Chinese tech companies like Alibaba are increasing their inventory due to passive restrictions, according to recent news, which highlights inventory management issues. In just one quarter, NVIDIA's H20 artificial intelligence chip, which is now the only artificial intelligence chip available for sale, is reported to have been ordered in the hundreds of millions of dollars. So from NVIDIA's perspective, demand is skyrocketing like this, and they have to decide whether to increase production or, in light of potential tax implications, prepare for a decrease in demand by reducing production. Why? Because inventory is an incredibly important issue. If you see this complex situation unfolding, it seems likely, and there's another issue that makes the situation very complicated. The Trump administration has yet to clearly state its position on the artificial intelligence calculation rules of the Biden administration, which are scheduled to take effect on May 15th. This is another regulation. NVIDIA and other semiconductor companies are urging the Trump administration not to enforce such regulations, and this is particularly likely to affect NVIDIA's revenue control. As you can see, there is significant uncertainty in the semiconductor sector. Also, the situation could become even more complicated due to the potential delays in infrastructure projects. Well, as many of you may know, recently, according to T.D. Cohen and the contents of a Bloomberg article, Microsoft has delayed or postponed many large-scale data center projects in India, the United Kingdom, and various states in the United States. And such decisions are raising fundamental questions about the demand for artificial intelligence services, artificial intelligence chips, which were previously considered the strongest growth drivers in this field. As you can see, the starting point for artificial intelligence models is shifting from training to inference. In this context, there are predictions that NVIDIA's market distribution power for artificial intelligence chips will weaken. However, NVIDIA is holding about 40% of the data center sales for inference, so there is a silver lining. They are responding strongly to this, growing incredibly fast and showing strong resistance. NVIDIA specifically has the NVL72 server system, which now incorporates as many as 72 GPUs. This is their latest system. They claim that it provides about 4 times improved performance in artificial intelligence model training compared to the previous model, and in inference, it provides a whopping 30 times improved performance compared to the previous system. Therefore, NVIDIA's graphics processing unit chips, which continue to evolve, have no choice but to sell well, which is NVIDIA's market position. Well, I will try to summarize this again in a nutshell. Yesterday, as the stock price plummeted, NVIDIA's TTMPER has now fallen 34 times. Trailing 12 months is an acronym for trailing 12 months. It means that the market capitalization has risen about 34 times compared to the net profit NVIDIA has made over the past 12 months. Next is forward. The market cap is projected to be 2253 times the anticipated net profit for the upcoming year. It's almost 22 times the S&P 500 average. So if you see it as the current highest company receiving the premium of the average company in the market, it makes sense. Well, and there's a graph here. It's the price-earnings ratio statistics of NVIDIA for the past 5 years. As you can see, the current level is very low. In the past 5 years, NVIDIA's price-earnings ratio has never dropped to 34 times. As of November 2022, ChatGPT is being traded at a lower valuation than before its debut. Yes, this is the point. We've seen ChatGPT rise sharply due to artificial intelligence, but the problem is that the current level of valuation is even lower than before ChatGPT's debut. The story is NVIDIA originally made GPUs for games and then evolved to make GPUs for data centers. Even until then, it wasn't an artificial intelligence powerhouse, but even after becoming an artificial intelligence powerhouse, it's still before this ChatGPT debuted. In fact, we can confirm that it is trading at a lower valuation than price-earnings ratio. Okay, I'll attempt to summarize the past decade for you. The price-earnings ratio of NVIDIA over the past 10 years has been an average of 32 times, but the current price-earnings ratio of NVIDIA has fallen to 34.66. So compared to the average of the past 10 years, NVIDIA is trading at a price that is discounted by as much as 35%. So if this adjustment is done well, we could even go to the bear market, but I don't see it going that far. Anyway, no one knows how long the stock price will fall. However, I would like to point out that there is a possibility of a huge surge when the atmosphere reverses and good news comes in. The last content I will share today is a CNBC news clip. It's a short video, but I've condensed a 3-minute, 23-second CNBC news clip into today's United States stock video, which I plan to send to all of you. This news features Brad Gerstner, the Chief Executive Officer of Altimeter. He's one of the investors that many investors are interested in, and he revealed yesterday that he bought NVIDIA stocks. Despite the high price, let's take a look at the reason why he bought NVIDIA stocks. This week's broadcast ends here. It's been a very busy week. I hope you all have a fun and enjoyable weekend and get rid of all the stress you've accumulated. Next week, I will gather various information that can help you in your investment activities and see you again. We are all fighting together until the day we retire from investing in United States stocks. Have a happy day. Thank you.
You have very clearly evaluated the introduction method and seriousness of this incident and the effect of the sleep-inducing spread. Despite this, you have increased your net long position even more than before, including some sectors, including NVIDIA, which is experiencing recent difficulties and is having a hard day today. Why did you add the corresponding sectors at this point?
The semiconductor index has dropped by 20%. As you know, after NVIDIA set a target of $150 this year, it showed a downward trend, with the stock price falling by about a third. Remember that we came into a bear mode with a considerable number of sales, including Nasdaq's plunge. We have a lot of cash on hand. Only 50% of our long position has actually been exposed to the market. On days like today, we are delivering extreme performance. Therefore, we are transitioning from a bomb shelter mode to a more balanced and safety-oriented positioning. In other words, we are focusing on sectors that show continuous growth by adding about 15% of pure play. The performance and demand of the application-specific integrated circuit and graphics processing unit are explosively increasing. You've probably heard about open artificial intelligence, Google's DeepMind, and other people's stories. I know there's a debate about this, but it's just one side of the argument. And yesterday, the tax office announced, but the exception list was also announced, and one of the notable exceptions is half-body. The reason semiconductors are allowed is because we can't manufacture them in the United States. So we have to impose a tax on the houses where they are manufactured in Taiwan. We still don't have a solution. As mentioned in yesterday's speech, TSMC has committed to a large-scale investment to build the most advanced fab in Arizona, following the president's policy. However, we were surprised because we knew that raising the cost of designing chips for companies like Meta, Google, Microsoft, and Open Artificial Intelligence is unproductive. We have entered the global artificial intelligence competition, and we must win in this competition. So we think it was a wise decision to put it on the exception list. We will continue to monitor whether construction is being carried out in Arian. However, we believe that such a decision will put us in a better position in the global market. However, this is exactly why we are buying NVIDIA today. The demand is tremendous. We believe the negative impact due to taxes will be much less than other sectors. However, if we fall into a recession, even if NVIDIA's profits increase 18 or 19 times, it may not be able to achieve good results. We need to avoid a competitive race. In the situation where we are looking at the 2026 midterm elections, I think it would be very bad if we get caught up in a competitive race. The president, the administration, and the Congress do not want to perceive the risk of a competitive race by the end of this year.